I have some major opportunities to share with you in this video, some of them from big tech, some of them penny stocks. We're going to talk about the background market bias that underlies it. We'll also talk about Bitcoin as part of that and where Bitcoin could potentially go from here and what exactly it is we need to look for. So we got levels and everything for you. Also shared over the Discord, links in the description should you guys find this stuff interesting enough to come on over and visit. So SPY, you can see the ticker symbol back here, and we're looking at the 1 hour chart. So with SPY, the levels that we're looking at, we need to solidly break up over 681 and show a support that's taken from this peak that we have here, which coincides with this resistance that we had over here on those previous days as we look left, and we need to get up over this trend line that you see. So 681 is that number. Watch for rejections, and at least initially around 680 and 681. Those are probably going to be pretty critical for us as we approach it from the south side, and also this trend line might also offer some initial rejections. So just be on the lookout for those. If we can get above those, we probably have a higher climb waiting for us, and that could be very good. The RSI on a daily basis is bullish right now. If we go to daily, bullish. If we go to the monthly momentum or the weekly momentum, bullish. And if we go to the monthly, we're overbought a little bit, but that doesn't necessarily mean that we're going to retrace from right now. We can certainly be more overbought than we are. If we go to the Qs and work our way backwards, monthly overbought, weekly we're just barely below overbought territory in a bullish territory. If we go to daily, we are rightly within bullish territory. We definitely want to make up over the 5 EMA and climb back on top of those. Now, with these moving averages, you can see, and it's going to be similar for the SPY, we're up above the 513 and trying to climb above the 50. We're down below this current trend line. And just like I told you with the SPY, we have this level here of about 627 is what we're watching for. This is both of these resistances that we have are pretty close. And just like what we saw with the SPY, we're getting that rejection right around where we find the bottoms over here going back to the end of October. And we have two different trend lines to make it over for the Qs tracking the NASDAQ 100. So there you can see in the background QQQ, 1H for every candle being worth 1 hour. And we even have a bit of an inverse head and shoulders look on this thing. So left shoulder, head, right shoulder, and the neckline is going to be this whole big wide area that you see in here that goes all the way from about 625 up to about this 627. Sitting on top of 627 is probably likely we're going to find that solid movement to the north if we're going to get it. When we go to IWM, what are we seeing for tracking the Russell 2000? Well, I talked to you yesterday that it should be a pretty darn good day, and it was so far. We got to make it up pretty much over $246 if we round up to the next dollar here, which pretty much coincides with this 200 EMA that we have for the hourly chart for IWM, which is the largest ETF that tracks the Russell 2000 stocks. We have already made it up above this trend line, and we keep on seeing that history of bigger performance to the upside or downside with what we have with the larger indices that are out there for the larger companies, as the Russell 2000 stocks are small cap companies. And so Bitcoin's probably going to have a lot to do with that. Here's the 1 hour chart for Bitcoin versus the US dollar. And what you can see is that we're firmly getting rejected all sorts of times, at least 5 times as we go along this trend line. And we lost the 50 EMA, and the 13 served as rejection for us, but we made it back over the 13, but now we're back down below it. We broke the 50, couldn't hold it as support. Support failed, broke it again. That's a second rejection. So far, it's sitting right here. Let me zoom in to show you this previous price action that we had that happens just north of 102,000. We want to hold on to that as support. So we failed to break the ceiling, so it came back down to test the floor. It's testing the floor as I speak, as I record this video. Break the trend line, break the 50, and hold on to those as support. And then it becomes a matter of, okay, so can we break solidly back over this approximate 105,000 that we have, which is where we're seeing those peaks, those previous peaks that we have along the way. And we're looking for a pattern of higher lows and higher highs. Right now, the lows are coming up, but that's good. The highs coming down, that's sounds of consolidation, and you can even see that reflected in the volumes that we have for Bitcoin. So that bullish move to the north is going to be good for supporting risk asset movement. Same thing for, and when I say risk, I mean the riskiest ones, the penny stocks that are out there. And I'll talk about those in a moment after I get to just a little bit on big tech as well. So we do want to see that move to the north. Same thing for IWM. That's really going to help out the penny stock plays that we have here. Certainly helping the crypto space. 106 is a big fat rejection point for us. So if we see 106 met, it's probably going to happen and then get rejected at least initially, and then we have to watch and see, okay, does that rejection sustain after it checks the floor? Floor holds, it's going to push again and probably break up over that if the floor does in fact hold. Right now we got to nearest term thing as I record this video is the 102K. It's got to hold. If not, 100,000 is down below that. If 100,000 gives way, we're probably going to see a further drop down to 89,000 or so. So probably giving up another 10%. That's if that floor happens to break on us. And so we would be watching for that. We also be watchful that we're watching the news for the government shutdown. We want that to end as soon as possible. The market's probably going to like the end of the shutdown, and we'll probably see that as a rallying point. When we go over to Nvidia for the first of the big tech plays, I said about the support, the initial support that we should see at about $195 per share. And so we touched that yesterday and then today bouncing back up. And if we drop down to the hourly chart for Nvidia down from the daily, you can see that we're in a descending wedge pattern with a bit of a look of a double bottom here. So if we can break up above this trend line and so far having that 200-hour as support for the exponential moving average, if we're able to break up above this top trend line, that could be early signs of reversal. And then, of course, we also want to take the 50 and we want to see bullish crossovers of the moving averages where we have those faster moving averages crossing up above the slower moving averages because that can be further sign that we're going to see that. The RSI is still a little bit weak on the hourly chart at about 45. When we go to the daily chart, we're at 54. So the longer term trend so far is still bullish. And yeah, we lost the 5 EMA, but so far we're keeping that 13. Lost it yesterday, trying to recover it today. Today's a very critical day for Nvidia leading things. Meta, there we go. Meta got a little bit stomped since their earnings, and it's showing signs that we could see that reversal. So for Meta, I put this over at the Discord as well, so people were already able to start digging into that and looking to see what they think. Up above 642, things get pretty exciting for us. So if we look at Meta's hourly chart, that's where you're going to see that descending wedge that I talked about for Nvidia as well. That descending wedge is a bullish reversal pattern with a little bit of a look of an inverse head and shoulders. You can see that neckline right at about 642. We want to push over that. That's also going to give us a bullish crossover with the moving averages if it can happen. We could have a fairly strong day coming out of Meta today, so that could make this fairly tradable in a long sense, in a bullish sense. So also Microsoft is another one to pay attention to. There's once again that descending wedge look. And so I'll tell you what, like this is a very strong pattern. This means that it's not company specific, that this is more industry specific. And then when we're looking in the tech industry, AI space, that's what we're seeing. And this is an even better looking descending wedge pattern. So we want to see that push up above the 5 EMA and the 13. Right now we're trying to do that. We took a bounce off that bottom trend line. And a lot of it is going to have to do with a bigger market movement. And we could be seeing that, especially if Nvidia continues to recover, as I believe it's currently going to test that. Into the penny stocks, look at NVTS. NVTS is in a big fat area of support, but it's near the bottom of it. It's taking that bounce so far, and the number that we have to get up above is $10.22. So pushing up above that should be good for us. In terms of the moving averages, we got to retake that 50 EMA. We had a bearish crossover between this green 5 and the yellow 13, and that we certainly don't want to see those cross over the 50. That's a further bearish sign. I will say that if we lose this support, we're probably going to tumble down to $8 all the way down to about $7.35. In this area, I think that this is going to be a significant load zone for us. So if we don't see it here and if we fall through that support, we could have a pretty big tumble. That's a free fall area in there from about that $8 mark all the way up to $9.63. So if you're a current holder, that's painful. If you're in a long position in a trade, that's pretty painful. If you're looking at dollar cost average, you could be hopeful that you get some cheaper shares if it goes that way. So I think I would love to see it hit this load zone, because I think if it does, if we end up down in here and we see signs that that reversal is imminent, when we see those come in, then we can make it tradable in a long way. Until then, I'm not going to chase this thing on the way down. If I didn't catch it towards the top of this thing, I'm certainly not going to try and catch it while it's falling and go short on it, because I could be shorting near the bottom. And I don't want to do that. I want to short near the top. I want to be looking for those signs that it's going to decrease, decline. And right now, we don't have total evidence that it's done falling, but we also don't have evidence that it's going to head back up. It is encouraging to see that support, though. We do have to retake that 1022. We want to sit on top of this support, and that should also pair along with it signs that a reversal could be happening. Look at the volumes that we're getting. They are very subdued compared to what we got during that last rampant climb, but they are up above these really low volume areas here where we really had signs of that consolidationary period. And certainly back here, when we look relative to what was previously high volume, you can see those boring times. And those boring times could be those signs where you start to watch, okay, the interest has gone out of the play. Then you watch for the pickup in volume. And you can see the early pickup in volume here. That shows us that, okay, accumulation is starting to occur, the price is starting to appreciate, and there's when everybody starts catching on, is through that point. That's what we're looking for. We don't have a lot of evidence that that's the case yet, but we want to be looking for that, and the candles are going to be one of those early signs to see it. The RSI just down below 50, so just in bearish territory. For ONDS, man, this thing is trying to recover, and the price that we have to get back up on top of is that $6.74. If we can get up on top of it, that's going to be great for us. Right now, we're holding this near-term trend line support, which is fairly weak, but I will tell you there's a lot of resistance that happens in the low sixes here. So getting back up on top of that is going to be good for us. Getting back up on top of 674 is going to do a lot more good. It'll probably bring with it an initial rejection if we make that climb. If we can't make that climb, the next big support down below is all the way down at $4.69. And once again, I like to talk about opportunity here. And I said that I would have some opportunities for you. When we look at the daily chart, especially when we look at the moving averages, the 13 crossing over the 50 is a bearish sign for us. That's a pretty strong one. And so we can watch the candle structures. We had a lot of indecision yesterday, a lot of contention, and we're starting to get some excitement, some build up here, but the price action is still a little bit sour, a little bit south for us. So that's not really that confirmation we're looking for that we're starting to reverse things, but it could be close. If we happen to fall through this bottom here at 577, that could be for a further sell for us. Then we look for that support down to the bottom. And like I said, 515 is one spot, but 469 is even stronger. And then there's this big fat area of support from 340 to 417, which I think would be that major accumulation zone. If we see that pain come in, if not, if we can take that 674, we could be very quickly back up to nearly $8 per share where we have this tangle of resistance to the top. RZLV, descending wedge like we saw with some of the big tech plays, breaking up above its trend line. We need that volume support. So far, we're not seeing it. These volumes are still very tapered, so we might break out of that, but this could also be a sideways chop for us. It could be very weak movement to the north and not be that high conviction that we're looking for if that volume support doesn't also pair with it. So that's what we're looking for RZLV. It could be, today could be that day that we see that massive pump to the north. It'd be nice if we had a news catalyst going on with it as well. So let's move on from there to bigbear.ai. This is the wrong chart. There's bigbear.ai, which had a nice movement yesterday, and it did go right up against our resistance area that's to the north of that, and that's worth paying attention to. This might be locked for us. Yeah, I'm not going to be able to move that right now. That's okay. So let's drop down to the hourly chart and see what we're getting. There we go. And what we see is we're starting to put more pressure. The bulls are saying, hold the line here. It did. And they were able to push it back, able to regain all that ground. The bears, the battle is being fought just north of this right now, 622. This thing could quickly push for us back up closer to the mid sixes based off this formation that we see right now. So we could see that movement happen. But just like I talked about the volumes before, right now, relatively speaking, there's no volumes in this movement. There's not a lot of conviction. It could make it difficult to really punch strongly through this resistance that happens to be to the north. Watch for the volumes as one of those early indicators for us. It's going to be very telling for what we get. So guys, the technicals for these and more over at the Discord, including the other panel experts. I teamed up with Stock Mo back in March, and I'll tell you what, the entire ecosystem that he and Mrs. Mo have built up over time, the AI tools, the advanced charting tools, the bread bot that's over there, the panel of experts of which I am a part, the live trading that typically takes place on Tuesdays and Thursdays, although I think this week was Monday, Tuesday. Next week, I think it goes back to Tuesday, Thursday. Crypto Will joins them sometimes when I'm off of work. I join them sometime in that live trading, and it's a really great time. Thousands of members over there already. I believe the 3-day trial is still active. Go ahead and try it out risk-free for those 3 days. There's a reason why 1,000 members are over there already that are being supported in their journeys towards financial freedom and building alpha in their portfolios. And you can please allow us to also support you in your journey towards financial freedom and building alpha in your portfolios through the tools and resources and opportunities that you can find over at that Discord. And if you guys want to educate yourself, do this technical analysis yourself for some of your favorite plays, trade your favorite plays according to those technicals, use options like I do to build that alpha in my portfolio, you guys can find the link for Stockmo Academy down in the description. With that, you get technical analysis when you sign up for it. And then there's also the bread recipe, which I trade with, that developed by Stockmo. And I'll tell you what, it is top notch. I've never found anything better for when those large movements up or down are coming. And then you can use options to trade accordingly. So one course, use code word doctor, you get $400 off. If you bundle the options course, technical analysis course together, you'll get a bundle discount, and code word doctor still gets you that $400 off as well. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.